Hello, everyone. Thank you so much for joining the call today. And I must thank Economic Times for organizing this session on India, especially at the time when the market is so damn hot. And I must tell you that the world is looking at India at the moment, wherein the installation numbers were all-time high, and then we have a lot of demand. And at the same time, we have all the leading industry players in this webinar who is going to answer all the critical questions which the audience wants to hear, which I want to hear, and at the same time, all the listeners of Economic Times as well. Going with my own introduction, I work with S&P Global. I'm the senior analyst looking at the solar energy research report, and I do research reports for the India market along with Southeast Asia market, and my team altogether we create research reports for the global market. At the same time, right now we are seeing that the India market has done record installation of 13.8 gigawatt AC in 2022, which in terms of DC is at 18 gigawatt DC after doing the AC to DC conversion. And then when I'm talking about this 13.8 gigawatt DC installations in 2022, we are talking about 756 megawatt of off-grid installation, which in itself is also a big number for 2022. I think all the industry players, when in the beginning S&P Global announced this forecast of 2022, nobody was thinking that the market can be so big, but this has been one of the highest number of installations in the history of India, I would say. And again, the off-grid installation, which is around 750 megawatt plus, that has also happened because the progressive government policies along with KUSUM program. Out of this, again, if we further try to separate the numbers, we see that 10 gigawatt has come out of ground mount installations and around 3 gigawatt has come out of rooftop installations. Talking about the local manufacturing at the moment, by end of 2022, India's local manufacturing capacity was at 18.5 gigawatt. And all thanks to the PLI scheme and the government's local manufacturing push. Under the expansion plan, we are already seeing that around 25 gigawatt plus projects are under construction and they are expected to come online by 25 or 2026. However, because of the low utilization rate, only 5 to 7 gigawatt of locally produced modules were seen in 2022. And the blame goes to supply chain issues and the raw material unavailability. The challenges that we have ahead in 2023 would be that S&P Global at the moment is forecasting that it is going to be 19 gigawatt to 20 gigawatt DC installations in 2023. And we are seeing a similar number in 2024, but we may have to raise our forecast further in case the government agrees to give ALMM relaxation, and also if the government is able to provide BCD exemption. However, I would like to hear from you guys, and because you are the leading players working on the ground, it'll be the best to ask these questions to you and see what is your response in terms of the market demand. So I will be following the screen here, and we will go for self-introduction, wherein you will be introducing yourself, your roles and responsibility within your company, and what is your take on the new target of 280 gigawatt solar target by 2030? Starting with Mr. Karan Chadha.
Thank you for the opportunity to ET as well for inviting me here. I represent Fourth Partner Energy. We are a CNI focused platform with currently about 1 gigawatt worth of assets, both on-site as well as off-site through open access. I actually lead the business development efforts for Fourth Partner Energy for the India business across verticals. In terms of, I think we would all be kind of saying something on the same lines that in case of the solar growth in India, it always seems like 2 steps forward, 1 step back. That's the dance that we have all learned in the industry for many years now. So we will continue to do that dance and hopefully get somewhere closer to whatever the number that you just mentioned. Look forward to the webinar. Thank you.
Thank you, Karan. And moving on to Pradeep.
Hi, I'm Pradeep. I take care of the Indian business for LONGi Solar. We do manufacture solar modules. I think everyone knows it, but Talking about the target, by 2030, there is 280 gigawatt of solar. We are really optimistic now. It's not impossible for a country like India, which has huge potential, but of course, we are running through a lot of challenges right now. And for a time being, we have seen some kind of a light by end of the tunnel now. So with some relaxations on ALMM, I believe 2023 and 24 will be a good year for a lot of imports and then a lot of installations in terms of solar. Look forward for the webinar.
Thank you, Pradeep. Moving on to Ravi.
Yeah, hi. Very good afternoon, everyone, and thanks for inviting to this webinar. So myself, Ravi Shaw, I look after the solar operations in ArcelorMittal. We are fairly new company in the industry, and we do develop. We are basically an IPP, and we do projects for our own captive use. Basically, we are trying to decarbonize the steel productions at ArcelorMittal Group. And looking at, as some of the fellow panelists have already mentioned, yeah, 280 gigawatt. Again, it's a stiff target. So to achieve this, we have to run with 27 gigawatt of installation every year. And Dharmendra has already mentioned that in last year we have done close to 14 gigawatts. So yeah, we have to double our speed in order to achieve 280 gigawatt. But being very optimistic that we as an Indians will be able to achieve. Yeah, looking forward.
Thank you, Ravi. Moving on to Mr. Arul.
I am Arul. I'm from ETEner Renewable Power. ETEner is IPP focused on providing firm renewable power at the lowest cost. I think that's our mission. So I handle the business development and technology and asset management functions in ETEner. See, I think the target or whatever the run rate that's required to achieve 280 is quite steep, given where we are and the setbacks we had in the last couple of years on capacity addition, right? So in that scenario, I think there are certain commitments. I think this capacity addition can happen only if there is a competitive manufacturing environment in India, and or the tariffs significantly increase and the utilities are willing to absorb them, right? It's either of those two can happen. Of course, capacity is critical, capacity in manufacturing. Second is what I would say is a competitiveness in the capacity that is built in vis-a-vis Chinese. I think these two are critical for this build-up.
And Arul, can you also add a little bit that are we prepared enough to fulfill this demand with locally produced modules in 2023 or in 2024?
See, there are a lot of announcements, right? So in India, announcements and reality are quite distinct. So I think if they get realized, sure, yes, the announcements turn into reality. But I think there are some serious players that has done 4 gigawatt, which is generally for the overall market, not limited to Tata. But there are others like Adani and RIL who have announced capacity dedicated for their own purpose, right? So that capacity is not going to be available for the rest of the market. And then there are smaller players who may not have the financial strength to scale to the extent Tata or RIL can do. So it remains to be seen what that build-up will be.
Right. Thank you, Mr. Arul. And Mr. Pinaki, you have to unmute yourself.
Okay. So I'm Pinaki Bhattacharya. I'm the Managing Director and CEO of AMP Energy India. So primarily the target is doable, it's reachable with 27, 28, 30 gigawatts a year. But the government should realize that you can't achieve everything simultaneously. So for 27 gigawatt a year, to uncover the best prices for the modules and the cells, we should have minimum of at least 30 gigawatt to 50 gigawatt of bankable capacity so that there is a fair competition. So today we are talking about only modules, but you need cell production in India because cell there is a dependence on China. So arbitrarily they can increase the cell prices to ensure that they make margins through the cells being sold to India rather than through the modules. So I think so any kind of market imperfection getting created through this artificial taxes and duties will not be very beneficial for India. For next 2 years, we should one side of the business we should put our head down to ensure that all the manufacturing in India, including cells and modules, comes actually into sort of, it's commercially available for everybody. It's not captive like Adani or Reliance or Tata. They are doing it for their own IPP business. So it is not available. Okay. And as Arul rightly pointed out, some of the people who are offering it, they don't have the financial wherewithal to give us 25, 30-year warranties. Okay. So we should not fiddle around with too many things. The PLI is announced. The PLI itself means that there will be at least a couple of years within which all these people who will actually establish capacities. For the next 2 years, we should not have any restrictions from any part of the world in terms of procuring the best quality modules for generation of power in India. And I always say, solar doesn't mean only making modules in India. Solar means generating power in India. That is also important, because each one of us is creating like 50 to 50 odd factories which are generating solar power in India. So that is much more critical than trying to have this policy. And what we are hearing signals is that hopefully this ALMM thing will be pushed out for another couple of years. And none of the investors internationally are happy with this artificial like barriers being created. Because if you are channelizing capital from across the world, so the world is a marketplace, both for buying and supplying. You cannot have this constraint policy that we are attracting capital from the rest of the world, but we cannot import from the rest of the world.
Right, Mr.
So
Pinaki.
the manufacturers are also exporting, right? If you see
I
today.
totally agree with you. And that will be our main topic again right after the introductory session. So please hold on to your thoughts, and I'll be coming back to you with more questions on that. Miss Ritu, please.
I'm Ritu. I work for a distributed solar, now renewable energy company called Amplas. We were also a startup. We set up in 2013. We began operations in 2014 with a 100 kilowatt facility. And today we have assets of close to 1.5 gigawatts, primarily for the C&I, the commercial and industrial space. That's about us. We have 1 or 2 assets at the utility scale, which are for sale to utilities. One of which actually was not meant to be a utility sale. And that's another aspect that I think we should discuss today is, the policy backtracking that happens, retrospective backtracking, which stranded us in Haryana, because as per their policy, we went and set up an open access plant. And then when the plant was ready to commission, they turned around and said, we're withdrawing permission. If at all you want to sell, you'll have to sell to the distribution company. So that's, that kind of stuff is there. The other aspects, of course, that we are talking about, ALMM, I know that they've made statements saying it's being withdrawn, but until it comes out on paper, it's not withdrawn. So as things stand today, we are still covered by the ALMM regime. BCD is a big issue, and that's the point that Pinaki was talking about. I'm hoping we'll, cover these aspects as well as we go along.
Right. Thank you so much, Ms. Ritu. And I hope I covered everyone. Pradeep, you didn't get to answer this particular question, wherein we are talking about the 280 gigawatt target, but are we prepared enough to fulfill this demand through locally produced modules? Along with this answer, can you just talk about how long your company have been active in India market and your total shipment to India till date?
So just to give a short brief about LONGi India itself, I think we are active in this market since 2015. That is when we also moved into the segment as a major module manufacturer. Prior to that, we were majorly a wafer manufacturer. And yes, of course, by then, the market was not so active for the monocrystalline modules. It was more of a poly module driven kind of a scenario here in India. So we waited until 2019. By then, we started setting up our huge manpower here in India for doing the sales activities. And since 2019 end, I think we have been getting good responses. We have done around 9.4 gigawatt till date. 2021 itself, we had done around 3.8 gigawatt in a single year. Last year, we could do around 1.8 gigawatt itself in the initial couple of months. After that, the BCD regime and other things put a hold on a lot of imports. So this year and next year, I think because of the news, what we have been hearing, I think we're much more hopeful. We will be here for a long run. We have one of the biggest Indian teams to working with all the clients here as well. So the plan is definitely for a long run. Yeah.
And what's your take on the BCD impact?
So BCD on a bigger scale, I think it is still hindering a lot of big projects for now, because as we have seen, once the BCD was implemented by end of March last year, we could see that there is absolutely a big stoppage in terms of the imports, because the cost has really gone high. And then adding to that, 44% of the entire BCD makes the entire project unviable for the old bid projects. But I think going ahead, if BCD is a mandate, I think that will be included in the costing by all the developers, and then things might go ahead. So all we need to focus on probably is the non-tariff barrier, which is mostly like ALMM and all, which might completely stop the imports in the future. But if it is just the BCD, then the only point is, I think the discounts will suffer a lot, because their tariffs will go on a high side and they'll have to be paying more on that. So we don't see BCD as a stopper for imports, but the only challenge is the economics might not work out in the way it used to work before.
Right. And same follow-up question again. I would like to ask the same question with Mr. Arul from INR Renewables. If you can also talk about how the BCD has impacted businesses, and especially INR Renewables at the moment. I can see that the company has done a little bit of utility scale projects as well. How do you see the market shifting from 2022 to 2023? How this BCD will be impacting your businesses in general?
See, I think when we bid, right, we always bid with the lowest cost option that's on the table, right?
Right.
And today, the lowest cost option is imported cell with the module made in India. So I think the people talk, of course, ALMM requires the module made in India, is a different issue. But even if ALMM were not there, right, still given the 40% duty on modules, vis-a-vis 25% on cell, right? The natural inclination will be to go for an imported cell and a module made in India. So that's the default position, I'm sure, of most developers. So while the ALMM, I know someone has asked the question also, ALMM is getting relaxed. ALMM is getting relaxed is good, but at a 40% module duty, it may not make much of an impact in terms of what we import from China. So when we go for a bidding also, I know Pradeep was talking about BCD, you don't consider the higher of the two cases, right? You take the lower of the two cases, import cell at 25% make-in module versus the import module and pay 43 or 44% taxes. You would find that the earlier case is always better, the import cell and make modules, right? To that extent, this ALMM waiver may not have a big impact on the already awarded projects, because the economics is based on a certain assumption, and that assumption is not being met. I think the one thing the government can help, and I think which is a clear change in law, is this PIR. So when we bid, we were all aware of BCD imposition, right? But the PIR route was available to all the developers at the time. So now the government has done a change in law on the PIR. So I think the ALMM relaxation, along with the recognition of PIR as a change in law, I think that would help the industry, because of course, if you look at the budget notification, it's quite clear that the change in PIR of excluding solar power generation is a change in law that they have clearly notified, right? So I think so. So to me, BCD is known, and most bids were planned accordingly, assuming alternate options that were available at that time, right? And some of those options have been recently closed, the October 22 notification as well as the budget announcements, right? So of course, going forward also, I don't see, given the current construct, us bidding with the assumption of importing modules, right? Because still that will be not helpful from a renewability standpoint. Right?
Right. And since you spoke also about the change in law, with the change in law clauses, do you think that if at all bidders are going for the change in law clause, it is going to add many more complexities at the same time?
See, so of course, there is a cost element in terms of a change in law clause also, because the processes, the regulatory processes to get the approvals, right, are not so simple. While the government has announced that the bidding agencies such as the SECI can bilaterally discuss with the developer and agree on the change in law. In practice, it does not happen because on SECI, on the other side of SECI, you have a utility company or a DISCOM, which is governed by a different regulatory commission. And ultimately, we end up going to regulatory commissions, and the change in law claims don't get realized fast, right? We plan for 1 year, but even in 1 year, they don't get realized because every DISCOM fights against an increase in tariff, right? So the change in law has an impact on the industry in terms of the recovery is also, I think the rate of recovery is not 100%. I think there is a gap in what we put in versus what we can recover under change in law because of the discount rates given that there is a gap there also. So yes, but it's still better than 40, right? A 7.5% or is better than a 40% duty. Even if I lose a 2%, 3% in terms of interest rates or whatever the delayed realization, it's still worthwhile. But of course, currently, I think there are several cases pending, I think in CERC in the Delhi High Court related to this PIR as a change in law. There's no pronouncements yet on that. I think that would clearly dictate the pace of implementation in the next year.
Right. Thank you, Rul. Moving on to Mr. Pinaki from AMP Energy. You have been very active in the hybrid utility scale projects as well. So what's your take on the hybrid market at the moment in India? Along with, I would also like to have your comment on BCD and ALMM restrictions.
So, see, as far as the ALMM and BCD is concerned, a lot of the conclusions that Arul has, it is my thought process is similar. See, there is a realm of what should be the case, and second is what is possible. Now, what should be ideally the case is that ALMM restrictions should not be there. Okay. Having said that, I mean, the government has not come out with a clear regulation, and this has been happening all the time. There's an announcement by the Power Ministry, but in terms of actually putting it in paper, there is some part of the government which actually acts against it or something for it, and somehow we suffer at the end of the day. So one is ALMM has to be removed immediately, or it has to be deferred for a couple of years, because without that, it will be for all this targets are theoretical essentially. The second part is the PIR part. Now, PIR, it is black and white. It is a change in law. Having said that, to affect the actual cost change in tariff because of the change in law, it is a regulatory process, and it's like it is time consuming. We waste a lot of money which we could have invested in actually projects to affect the change in law. So PIR, I mean, although the ministry was telling us that, okay, this should be taken out, but I think so it was knocked out with some other parts of the government, and it is now a changing law. We would want it to be taken off, and it should be PIR should be allowed actually. Right. Third thing is that as far as well, I have an idea, because basically, see, BCD is there here to stay. I don't think so there will be any change in the BCD, because I think so that's a advocacy battle we have lost essentially, and even the module manufacturers themselves feel that why are they importing cells and paying 25% duty when there is no cell production capacity in India.
There was a talk in the between with MNRE saying that they are going to give a BCD exemption for projects that has been awarded before March 2021. What has happened to that? Has that come to a standstill?
See, all the sort of the talk that you hear in the newspaper and all, as of now, nothing has come out on paper today. Nothing. It is zero till now. There was a talk about PIR being allowed. It is not there. There was a talk about even the BCD sort of at least for the cells being reduced, because even the manufacturers there wanted a BCD reduction on cells, because all the manufacturers importing the cells. Okay. Right. Third thing was this ALMM. So as of now, nothing actually has come out. And on top of that, our ask was also to reduce the GST. So GST was interim also raised to 18%, and now even the IGST has been raised. So, I mean, so what is basically in terms of the taxes and the duties regime, what is happening today? The government is not walking the talk in terms of getting it done. We are hopeful. I mean, we see the Power Ministry and MNRE has been always supportive, but it has to be affected in a larger sort of set of people. So that is not yet coming out. So it's not yet happening, and it will have an impact on the rollout this year. And when we face very high electricity prices, because the discoms will at the end of the day suffer, and eventually it may socialize to the consumers. People like you and me, we have to pay for it at the end of the day, right? If the discom, right. Because last year during the summers, the prices hit 17 rupees on the exchange, because there is a coal. There's not enough coal to sustain the demand. Now we should be pragmatic and say that, okay, let us remove these artificial barriers for a couple of years. Let us get back to 30 gigawatt of capacity for 2 years, and let us get going. And in fact, if there is any restriction, let's say for ALMM or anything, they should ask all the CPSUs to use that. Today, in all the bids that we face, we have an SJVN, we have an NTPC, and we have NHPC, the government arms who are bidding. Now, their cost of capital is far lesser, right? So why, and that's almost 50% of the market. Why don't they procure all these modules from India, and leave the private market free to competition? That can be done, because I think so in most of the bids, that's what we have happened, seen. And coming back to the point in terms of the hybrid, see, hybrid, obviously, hybrid, there is a market is sort of in a way slightly better, because it generates power for longer time frames, right, during the day. So whenever the ultimate consumer sees the power pricing, so during the peak hours, if you're generating, the saving in terms of the power cost is more, right? And it is also a better utilization of the solar, the transmission capacity of the country, because if you're pushing better, essentially PLF for the same megawatts that you're blocking, you're more efficiently using the transmission system, more efficiently using the land, and you're actually giving a better sort of saving to the customers. So I would say that is an area that is growing, I would say.
Right. And you are also active in floating solar market. How do you see the FPV market growth in India and its benefits?
Sure. And we are pretty much active everywhere. We have, let's say, a balanced strategy where we do utility as well as CNI. And in CNI also we do rooftop, intrastate and interstate. And in utility, we will do solar, hybrid, wind, as well as floating now. Right. So coming to your question in terms of floating. So floating essentially is is a good sector, I would say, because you don't have to have the land acquisition challenges in the floating solar. And and also you are able to sort of generate more power in the same footprint in terms of the area, because and also the cooling is there. So overall, it's a good utilization of our reservoirs, and the technology is fairly stable. And I think so after this, our project in Omkareshwar, and we are seeing every state government is using the reservoirs in their large dams to do the floating kind of solar, I would say, expansion. So I think that's a good growth area. It's a good utilization of our resources. Actually,
is the cost still a factor, because floating technology is fairly new to India and it is still costing more than the ground mount solar or rooftop solar?
No, technology is not new to India. It's basically there are operating power plants by NTPC in Ramagundam and Kayamkulam and internationally. It's basically you have these floats, SDP, and just put it on. That is it. It's not like floating like offshore wind turbines and all. It's a fairly simple, low cost technology. As far as the tariff is concerned, obviously, the tariff is slightly higher, and so is the cost, but overall returns are kind of similar. So, but you don't have the challenge of acquisition of land, and it's also environmentally very good, because the drinking water essentially, basically, mostly it is like fresh water where we are doing it, so it saves a lot of drinking water.
Thank you so much for that. I was asking you floating solar market trends, because we have recently also published our floating solar report. And as per that, we are seeing a lot of potential in India at the moment, along with European countries and a lot in Southeast Asian countries.
And they're bankable also. That's
moving on to Amplus Solar, Mr. Ritu. You have a portfolio of 1.5 gigawatt in distributed generation. How do you see the demand for open access projects in upcoming years? Is this market able to absorb the high equipment prices and still provide electricity at a competitive price?
There are 3 questions that you asked me there.
Yes.
So number one, on the demand side, of course, it's there. And if the inhibitors on the policy front were not there, I think not just Amplus, but all of my worthy competitors here, we would have been growing way faster. So we've, as somebody mentioned, that we've learned that 2-step dance technique to somehow, navigate the various barriers and find something for ourselves to exist. The demand is very, very strong. If anything, the demand is growing even stronger. And, and we are innovating. So, we tried to work on the virtual PPA market. And I remember Pinaki was a very strong advocate of that. That got stuck into, SEBI issues, etc., which I think was on the verge of getting resolved because, it was being looked at as, something in the futures and derivatives aspect of trading. But if you look at the kind of PPAs that large corporates, especially the very, very large IT companies and all, are signing with each of us of over 100, 150, in some cases 250 megawatts of open access, but where they are not buying the electricity, they are only buying the green attribute. So that actually that's simply like so virtual PPAs kind of got stuck. This was the next product that evolved, navigating all sorts of regulatory and policy hurdles. And the energy that you generate, you sell as brown power over the exchange, or you find other buyers for it. Why it works is because with the additional that you get for the attribute, even when you sell it as brown power, it becomes competitive against any other form of generation. So the demand is very, very strong. Coming to the issues. And I think I have a fundamental problem with, when we have so much capacity in the country, then we put in barriers. If you have adequate capacity of high quality, technologically sound, high performing, and cost competitive products or services, they will run on their own. You do not need to put barriers. Wherever we have tried to put barriers in the past, what have we ended up with? I'll give you an example of automotive. And I think while some of us are younger and some are older, we all know what kind of cars and we used to drive in and how much we paid for them. How long did they survive once you opened up the markets? And our automotive is still relatively expensive with the high duties that we pay over here. So when you put protection, you will get what we got in the automotive sector. And we'll think it's a great product and we'll insist it's a great product. When you talk about energy security would mean long-term energy generation, right? It's beyond the megawatt peak and the gigawatt peak of capacity that you've installed. If that capacity is not generating as it was meant to generate for the duration that it is meant to generate, you have failed in your energy security. I would love for there to be domestic manufacturing. There are many things which are available to me domestically. It's way easier than importing. It's less challenging. It is less risky. It is faster. So imports are not done because I don't want to support domestic. Imports are done as a necessity. I, for one, would be willing to pay a marginal premium for something which is available to me locally. And the fundamental point that I want to leave over here is, do we have what it takes to be a domestic module manufacturer? Can we match the quality, technology, performance, and cost equation? Because if we are not able to do that, it won't work. All sorts of barriers can be put, it won't work. What will suffer is India's energy future, India's energy security, and the cost at which we are generating. We are entirely import dependent. I know we keep talking about cells and modules. 75% by volume is glass. Over 90% of solar glass is imported. You cannot, the cells alone are, they have to be put together in a module. Backing sheets, laminators, the capital equipment on which these modules are made, and very often even the technicians are all being imported. So I don't really know whether we have what it takes to make modules. And I don't for once believe that Atmanirbharta means making everything on your own. It should be the availability to have it when you need it and to have the security of it, knowing that it will not go away because of certain geopolitical reasons, etc. And we need to look at it with that aspect. If you're looking to try it, what is the BCD there for? And it's a sad day that we have a BCD of as high as 40% in this day and age. It's there to make Indian modules compete. So, Indian modules are more expensive. So you've artificially raised the cost of imported modules. You can match this price by incentivizing domestic manufacturing, right? Which will not, I know that is also going to cost you money, but the discoms are also going to pay more money when the cost of electricity goes up. So by artificially inflating the cost of something which is frankly not being dumped, because these are the kind of prices that these manufacturers have been selling to the whole world for several years. So I don't think it's a question of dumping anymore. So these are the kind of fundamental issues that we need to tackle. And once we've tackled this, we don't need to set targets of 300 and 500. You know, the country of our size, with the population that we have, with the growing energy requirements, the numbers will just add exponentially.
How do you see the expansion plans?
Can I just add one point to what
Yes, please. Yes, please.
Despite this 40%, still the Indian manufacturers are more expensive. That is the sort of this.
That's the beauty of it all.
Yeah, and they were more expensive when it was a lower duty. Now they are more expensive even with 40% duty, and they're exporting.
And look what will happen with the PLI. The PLI, the bulk of the capacity in the PLI 1. So the first, so they've done PLI 1 and PLI 2. So the PLI 1 that came out, the bulk of, so first of all, nobody who was an existing manufacturer actually was in the top 3. I think Adani is now number 3 because the original number 3 withdrew. And I think originally Adani were number 4. So in the original bid, when the results were announced, nobody was happy because the domestic manufacturers did not win. And the people who won and were setting up capacity were doing it for their captive utilization. They were not doing it for, so that capacity which was getting added was never going to come to the market. So a lot of, initiatives are maybe well intentioned, but we need to think through the repercussions of how it will play out, including ALLM and BCD, etc. Why can you cannot just sit here and expect that the market which is going to get impacted by your decisions is not going to retaliate. And the retaliation has happened. The gap between cell and module prices have come down. They're increasing the prices of wafers. If anybody's business is getting impacted, they're not going to sit back and just allow you to take over without giving you a big fight. And it's an unequal fight over here.
The next thing will be the equipment. Essentially,
Absolutely.
the module equipment you're importing from China, right? Now, if you take on them without being well prepared, and that's happening in now wafers or cells, because they see, okay, you want to put duty in 40% this thing, we will increase cell prices. Okay, you want to put cell prices, we'll increase wafer prices. Now, do we have the investment wherewithal to do wafer and polysilicon? We have, but it will take time. It will take 3 to 4 years. So today, instead of 14 gigawatt, if we had removed all this nonsense artificial barriers and have a pure free market, just like the discoms have a free market, we have to do reverse bidding. So how come the top line is based on free competition, but the bottom line is controlled? Okay. And that is where leads to market imperfection. And suppose if we had done, let's say, 2 times the rollout this year, the amount of taxes, let's say the finance ministry would have sort of gathered with, let's say, even half of this duty would have been the same, because the volume will increase. And as a result, the taxes and duty collection will also overall on an absolute basis be the same. Because at the end of the day, what is that we are doing here? We are trying to go to energy security. What does it mean? It means that we should have enough renewable capacity, which is dispatchable, to essentially do away with all fossil fuels. To begin with, let's have only coal for the time being and renewables. And then by 2070, basically do completely 100% renewables. So that is the goal. So that as an economy, as we are growing, we have a huge demand for energy, right? And energy has to be cheaper. If energy is cheaper, everything gets cheaper, right? And that should be the goal, not to basically allow some people who are in this trade to create huge businesses, which are there in this 3 or 4 names that we were taken, and they're exporting or using it for their own requirement. That is the sort of the imperfection that is there in the market, and that should be done away with if this goal has to be met.
What's your take, Ms. Ritu, on the new capacity expansion in modules? Like we have 18 gigawatt already announced by all the module manufacturers locally, and then there is another 25 gigawatt of module manufacturing has been announced, which is going to come up by 2025. But still, we are not seeing those kind of production happening on the ground. Your comments on that.
So first of all, these are listed capacities.
Hmm.
Now, I was reading a report, but this report is now 5-6 months old, that said that the capacity utilization industry-wide, and there may be companies which are at 100% plus, was less than 40%. So this is the total available module in the country. Yeah. They are all BIS certified. Not a single organization that applied for ALMM got rejected. So everybody who applied, everybody made it. There is no kind of, like the Bloomberg tier rating that used to happen. There is none of that. Everything, it's a go or a no-go. And so far, everything has been a go. So everybody has been lumped in the same bracket. Whether it is a tier 1 manufacturer like Adani, or whether it is somebody who may well be very good quality, but maybe having a capacity of 40 or 25 megawatt, or whichever technology, they are all today lumped in the same bunch. Companies like mine actually invest a lot of money in line testing. So even when we have been importing, and we've been buying from even LONGi, we've not bought anything, whether it is imported or local, without line testing. And when we buy imported modules, we use, the services of companies like TUV or UL to do the line certification for us. Our findings on quality consistency tell us that there is a lot wanting with domestic manufacturing. With increased, with the upgradation in technology that is happening, hopefully the quality challenges that we face will come down. But, if we are seeing double-digit rejection rates, that's impacting my business. And I'm a private company. I tie up with another private company to sell electricity, to generate solar. And I find that the government is overreaching in telling me which makes, which brands, which kind of modules I should be using, just because I'm using the grid, which frankly is a national resource. The grid is, the grid belongs to you and I. The grid belongs to the people of this country.
And we are paying
So
for
I
it.
think it's a bit of an overreach. I know, Pinaki, you were talking about, the PSUs, the CPSUs could be using, ALMM certified modules. The CPSUs were among the strongest voices saying, please do not impose ALMM.
I know that. I know that because, but the point is that is unfair competition, because CPSUs have the lowest cost of capital.
Even the government's PSUs think it's a bad measure. The problem with, how we use and deploy modules and systems is not everyone is doing a very thorough job on testing. And if the module has a shelf life of, or not shelf life, but has a production life of 25 to 30 years, if it starts to perform badly, it will not happen in the first 4, 5, 6, 7 years. And, I have my friend from LONGi over here who will be able to tell you that non-performance starts to show up around after about 7 years, which is a long time since you've set it up, but not even 1/3 of the life of that product. And then apparently it, performance deterioration is very, very rapid. I think a lot of people are aware of these issues. It's not just the cost factor. It's not just the cost factor. There is efficiency related issues. There are performance related issues. And I would find it difficult for my financiers are not going to back me using some modules just because the government of India says that they're BIS and ALMM certified.
Yeah, because on top of that, we also have to do the other third-party certifications also, like DNV. International standards are there. So, and Arul, I mean, spent a lot of part of his life in technology. So he also knows that, it just cannot, somebody who just said, I'm BS certified, I will not believe anything. So I'll do my own certification.
And my own, my own testing within my organization is showing me something which is rather scary. And I'm not very comfortable with this. Like I've said before, if the quality was right, if these were proven, you would automatically find a market for them. 8 years back, nobody was using Chinese inverters. Nobody. And I remember when, somewhere somebody said we were acquiring an asset and that asset had a Chinese inverter. And we, all of us wrinkled our noses and said, but we are only using SMA and look at what these guys are using. Those guys have proven themselves. So if you have a product that is world-class, it will sell itself. It will find a way. And today, I think all of us are primarily using, some of these largest Chinese companies, and they've done very well for themselves. So
In
Right.
fact,
same is happening in
Ms.
India.
Ritu,
and products
let
are
me
supplied
let me
well.
interrupt you a little bit here and bring you back to distributed PV generation. Ms. Ritu, can you give one more comment on the kind of policy support that you think can help this distributed generation segment to grow?
So first of all, like the solar industry in India is one which was this revolution was largely driven by the private sector, whether in the utility scale or in the C&I or the rooftop residential, right? I think it needs to be freed again. These kind of barriers that have come in and the kind of government control that has come in is really not required. That's one. Second is you need to have policies that think a little more into the future. Even the kind of things that Pinaki and I were talking about, the response from the country impacted. I could sit here and visualize this 2 years back when these decisions were taken. That obviously there's going to be retaliation. And what are we going to do to counter that retaliation? Right now, we are unprepared for it. The third thing is, and that's the worst really, when you make retrospective changes in policy. There is absolutely no justification for it. And I gave, when I was introducing myself, I gave the example of Haryana. And one of my competitors, who's not here today on this forum, but he and I, whenever we're on the same forum, he says, okay, and like Amplus, which has got Haryana'd, where our open access PPAs, and we got a very sorry figure in front of our clients because we had committed to supply to them. And we are supplying to the DISCOM, who we would have never been interested to supply to, at a tariff that does not even make it viable for us. That case is in the appellate and at Aptel. That bench is vacant. That bench has been vacant for, I think, a year now. So that case is not coming up for hearing. So these are the kind of issues, at least your courts and your APTELs and such bodies should be fully staffed. Your policy should never be retrospective. And think long term, be more market friendly.
Thank you so much, Ms. Ritu, over there. And then going forward to fourth partner energy, Mr. Karan. Post-lockdown, there has been a high demand for rooftop solar in C&I space. How much potential do you see in the C&I segment at the moment?
Look, like I think Ritu also alluded to earlier, demand is actually not really a concern in the business right now. So for example, if you look at the C&I segment consumption of electricity units out of the total, about 50%. And the government, in its wisdom in 2003, there was a law, there was, I think, the last significant reforms that took place which separated content from carriage. And I think the idea being that, what Ritu was saying, that if there has to be a free marketplace, if you want India to be making not only for India, but also making for the world, for the industry to be competitive, they should actually have competitive raw material cost. One of the critical raw material in a lot of heavy industries is the cost of electricity. So for the C&I segment, the use of renewables is, helps two things. One is, of course, they want to promote the use of sustainable materials, etc., like Ravi mentioned, in terms of going towards green steel, green cement, etc., as well as also make sure that the cost of electricity is something, which becomes a competitive advantage that they can utilize to win in their markets, whether in India or outside. So there is a natural inclination, and there is a lot of time that the C&I sector has to evaluate our offerings. Like all of us here, we represent different organizations, we serve the same segments as well, and see how we can actually have a mutually beneficial relationship. I think if you just look at the last 1.5 years, of course, one of the, and I think coming out of the COVID scenario, there was a general inflation that we saw across all commodities, as well as we saw that there were a number of supply chain bottlenecks that actually crept up, which actually impacted the pace at which we were growing, in addition to some of the other things that I think Pinaki and Ritu have already alluded to around policy flip-flops, etc. So there is a willingness to do that. Of course, we compete in terms of our ability to generate a return for our investors, and the fact that there should be significant benefit for the customer as well. So I think specifically on the rooftop side, it's slightly different from what we call the open access or utility scale projects, because operationally also, one, if you just look at the kind of capital that you're able to get for rooftop projects, the expectation of the investors who are investing in rooftop projects is higher compared to utility scale, because there you kind of try to compromise a little bit on margin so that you can make that up in terms of volume. Secondly, in terms of your ability to generate, if you're putting it, on a rooftop or within the premises, you may not have the most ideal designs in terms of maximizing generation. And you couple that with the fact that your O&M is not as efficient on a rooftop as it would be on a ground-mounted project. So hence those tariffs have been going higher, and of course that is creating a little bit of a sticker shock for customers. But be that as it may, it's like with anything else in the world, the market will play itself out, and we will find win-win innovative solutions, with customers. The bigger thing, I think, again, on the rooftop side or behind the meter side is a lot of states come out with great policies, and I'm not just talking about rooftop, it's basically across anything when you're trying to sell to a private customer. So whether it's open access, group captive, or whether it is rooftop, states initially come out with policies. They want to encourage, or they come out with some vision documents, etc. We find that, as soon as the state has seen some traction, there's the first 200-300 megawatts is installed. There are a lot of on the ground bottlenecks that come up in terms of approvals, NOCs, DISCOM NOC, some registration with some agency, for what purpose, I don't know. But, or somebody saying that, well, we don't allow only OPEX to happen. You can set up a rooftop, but it has to be captive. But by the way, I will not agree with the captive definition in the Electricity Act. So I think there is a natural, a policy can be great, but, we've actually learned in our organization, at least, that we don't read policy documents and get overly excited about them. Because we see that, on the ground implementation, sometimes it's totally different from what is stated in a policy or a vision document. And I think these are things that really need to be made easy, right? What is the point in terms of, all of us compete in an open market, and like I think Pinaki talked about as well, the top line of revenue is a free market. We all bid. The customer wants the lowest cost quality option that is available. But how do you keep factoring in these costs that, oh, maybe, my project will not get approvals for 5 months, or maybe, last minute somebody will say that, we will not give you certain approvals. For example, recently in Gujarat, policy was very clear, group captive is allowed, or group captive is not definition, but captive is allowed. Now suddenly they don't want to allow captive. It is, okay, so one part of it is that the Indian judicial system, for whatever it is, it's quite a robust system. You can go and fight and win. But, as private entities, we also have investors to answer to, and there is a choice that capital can flow to. I think that as a country, one of the things that we as, we should not take, foreign interest in our country for granted. Because we just keep thinking we are the second largest. There's only China, then there is us. Where else will they go? Sooner or later, the capital will find its way to a place where they are able to generate, a decent, risk-reward return. So I think that's something that needs to happen. Absolutely, I'm all for the fact that the government has to have policies. Now the thing is, DISCOMs bleed money. Because it's being a state subject and concurrent subject, etc. But there has to be a mechanism. It sometimes seems that policies are made, please go set up solar, and maybe some customers get a lot of undue advantage. It just can't be a, let's open it up completely, and then after 1 year just shut it down completely. Like if the DISCOMs need to be compensated, then there has to be a mechanism to make sure they are. Because I think this making policies on the fly ends up hurting multiple stakeholders, right? It ends up hurting customers, ends up hurting us, ends up hurting suppliers, most importantly, ends up hurting employees.
Agree, correct. I'll quickly move to ArcelorMittal, Ravi. Ravi, we have been also seeing the demand for trackers and bifacial modules have increased in India. And what is the reason behind this demand, and how is it helping the PV plant owners in India at the moment?
I believe, see, all this depends on the LCOE. Basically, whomsoever is the developer, they works for the best LCOE. And since most of the fellow speakers has already mentioned, the prices are going up for the solar modules. And once the module prices goes up, basically tracker and bifacial module because of the bifacial model, we get close to 2.5 or 3% gain in compared to monofacial. So if you basically combine the bifacial and tracker, there could be double-digit gains that we expect, and that actually drives the LCOE lower. So, but yeah, it totally depends. It totally depends the variability on the market, the steel prices, the module prices. So, I believe these two are the major reason for growth of tracker market as well as for the bifacial models. Yeah.
And quickly moving to LONGi, what are your plans for India? You can definitely see there is a huge demand, and there is a demand for monocrystalline, there is a demand for bifacial. What are your plans for India? Do you have plans of local manufacturing? You have any future capacity expansion plans? And what is your take on the BCD and ALM restrictions?
It's a good question. I mean, like many people keep asking me whether we do have any kind of a plan for setting up a manufacturing base in India. So let me give a small background in a very quick way. Probably we're a company who are looking at becoming international, although Chinese-based company. Becoming an international company is not just supplying modules across the globe, right? So we need to have manufacturing setups across the globe. And that's when you will have a better hold in terms of supply chain and better hold in terms of supplies as well. So we do have factories in Malaysia, we do have factory in Vietnam as well, apart from China. The next ambition was to set up a manufacturing in India, but then again, a question comes: why till March 2022? Why do we have to set up a manufacturing in India? Because importing was anytime better in terms of supply chain, in terms of costing, in terms of quality, and every other part. But after that, what has happened recently is, I think, past 1.5 years, due to the cross-border issues and other things, not many, I think, Chinese manufacturers have been entertained for setting up a manufacturing in India. I can tell the FDIs are not getting approved. It is taking a lot of time for approvals with a lot of uncertainties in hand. So currently, at the moment, if you can ask me, I think we are here for the long run. So we'll wait for the opportunity to come in picture. And with better opportunities in different countries who are accepting manufacturers from across the world, I think we are planning to set up another factory very soon in a different part of the world. Place is confidential now, but Indian plans for manufacturing is slightly a little bit delayed from our end now. Now, if you're asking about the BCD and LMM, I think everyone has already put their feedback or probably their own opinion on that. For me as a manufacturer, I think BCD was never a big challenge because we knew that for the current projects, it might be a big challenge, no doubt, because the tariffs are already decided. But in future, if people are ready to accept 40%, take it into the account, I think it will still go on. But LMM, I think the ministry also has figured out recently, and the unofficial news, what we have understood is unless and until India reaches a capacity of say 50 gigawatt of module manufacturing and around 35 to 40 gigawatt of cell manufacturing, these kind of policies will only stop the progress of solar growth in India. So with the kind of potential we have, like Ravi told in the beginning itself, that we need to do around 27, 28 gigawatt of solar per annum to reach the target of 280 gigawatt of solar by 2030. Now this is just solar, but again, adding to that, if you take into account the amount of solar projects we have to do for compensating the hydrogen projects or even the requirement of EV industry, I think that is huge. And that's almost like 40 to 50 gigawatt per annum. For me, implementing such policies at this moment doesn't make any sense. But all I can tell is probably with this kind of huge potential, we as a Chinese manufacturer or a non-Chinese manufacturer, everybody has equal opportunities. And that will be a healthy competition for the at least next 8 to 10 years till the manufacturing picks up in India.
Thank you so much. I have covered almost everybody with all the questions, and I still have many more questions to ask, but we are on top of time. I will ask two more questions open to the floor. How big do you think India market could be in 2023 and in 2024? Do you think it's 15 gigawatt, 20 gigawatt, or 25 gigawatt? I know we have all the restrictions in place, but still, maybe Arul, your
See, I think it depends on the PIR waiver or whatever you call it, or allowed import in PIR, right? If that's allowed, I think it can go to 25 also. There's a lot of pent-up projects which have been delayed for multiple reasons, GIB, transmission availability, and so on and so forth, right? Those, and also the increase in module prices. These three things have impacted the capacity growth. So I believe if though PIR is allowed as a change in law till October 22, I believe you could have 25 gigawatt also.
Right.
Actually, one point I wanted to correct. I think I know Ritu mentioned it because I've been in the manufacturing side also for a while in India. So I think to say quality is the reason for not pursuing manufacturing in India, I think is not correct. I think it undermines the country's capability.
No, that's not what I said.
Manufacturing.
I said
So,
today,
so I think I just
there
want
is
to make
no
sure that
differentiation in that ALMM list on quality, which is required.
I mean,
right,
they should segregate.
I heard it differently. So I just want to be clear
No,
that India
no, let me be very clear. I said,
capability of
that
manufacturing
the
quality.
tier 1 companies, which are Indian manufacturers, have been lumped with everybody else in the same
No,
list. There
understood.
is absolutely no
It should
differentiation.
be an
No,
Indian
understood.
tier 1.
That's
Some
approved
of these
list.
people that I'm buying from are tier 1. So,
Okay.
the rejection rates that you saw, also some of them are from tier 1 companies. Some of them are from ALMM, but may not have featured in the Bloomberg list. But the consistency of quality is more variable in the Indian
No, I
scenario.
understand. So that's what I'm saying. See, I
Even
think
with the
everyone-
tier 1, before ALMM came in, and when you went to get your project financed, they were way more comfortable if it was what module are you using? LONGi, there was absolute and instant comfort.
No,
More
that
than
I agree.
even,
No, I see. I
the
think
top
Ritu,
tier of
all that I
Indian
wanted to
companies.
make is make point.
There is, we are also setting up projects in India, right? A lot of what we are using is Indian, the way the
And
design is Indian. Everything else is Indian. So let
remember
not,
also is
this is not the point I'm making, but
you see, while
cannot
we talk
have
about
loose
we talk about-
structures and loose quality certifications, which lump everybody together, because then
Yeah,
you're
one more-
actually doing a disservice to quality.
So while we talk about quality and the warranty claims, right? I think again, when you're talking about China versus India, on a personal level, I would say if there was a large Indian manufacturer, I would prefer it since my ability to claim is more better. I'm in better position in terms of my ability to claim warranty, right? I think that
Absolutely.
this also should be noted.
Yeah, which is the point even I made, Arul, that if I had a reliable domestic source, I would be willing to pay a premium. Not a 40% premium or a 25% premium, but for ease of business, I would be willing to pay a premium.
Thank you, Arul there. Thank you, Ritu there. Ritu and Karan, I would like you to answer. How much do you think India installation could be in 2023? 15 gigawatt to 20 gigawatt or 25 gigawatt? And also in terms of distributed generation or rooftop generation, how much do you think would be the rooftop market for 2023?
So if you're talking just rooftop or distributed?
Rooftop.
Just the rooftop.
Yeah.
See, the rooftop alone, if you unshackle it, could be like what, 2 to 3 gigawatt. It can. It's not difficult, but it needs to be unshackled in the current scenario. I don't know. 25 is easily doable because 25 may actually come through, especially if the ALMM is deferred, and because a lot of these pending projects that Arul mentioned, which is again about, I think, some more than 10 gigawatts of pending projects are there. Then if you have bids of 10, 15 more, that itself takes it to 25. Then you may have about 5, 7 from the C&I segment easily, with all sorts of, open access, on-site, those kind of projects. And if there are small projects on green hydrogen, and I'm saying small projects on green hydrogen, and if they start to set up the renewables next year, that itself will be about 10 gigawatts of solar alone.
Right. And Karan, your
Sorry, I can talk about the C&I sector. Unfortunately, we don't work in the utility sector as much, so I'm not much attuned there. I think the C&I sector per se, so if you look at the rooftop or what we call behind the meter projects, right, I think a large chunk of growth in the last couple of years has been driven by the residential sector. But even in the C&I sector, it is about a gigawatt last year. I would expect, considering what the realities are right now, I would probably consider about 1.3, 1.4 gigawatt because we are seeing some softening on module prices. There's a little bit of pent-up demand as well because not a lot of projects were executed last year. And as far as the open access side on C&I is concerned, I think that's a big growth area. Hopefully, a lot of these projects will, get commissioned and we will ultimately sell them to, C&I customers and we will not get Haryana here, but I would think that this would be about 2.5 gigawatt market in the next 1 year. So total, if you look at distributed as well as open access, I would think about 3.5 gigawatt. Utility, sorry, I don't have much sense.
No
Right?
problem, no problem. And I must tell all the panelists that
Can I
we
just
have
add,
big.
actually, can I just
I
add
must
some
tell you all the panelists that we have
Sorry, I think
basically
Pinaki wants to make a point.
a lot of questions coming from online
moderation?
listeners as well, which is a really good thing. Pinaki, coming to you as well. Can you also give your input about the rooftop numbers and ground
No,
mount numbers?
focus only on rooftop. Actually, rooftop was as of today 7 gigawatt, 10 gigawatt is we have reached. I think so in CNI open access we had a target of 40 gigawatt. Okay, so let's focus on like your original question. Actually, see if this ALMM restriction is not taken off, you will see capacity addition even lesser than last year. That's the fact. Okay, because currently one of the largest player is fighting their own battles. Okay, who were supposed to supply modules for the market. Some of them are actually using it for their own requirement or exporting. So you will have a huge supply chain constraint if this ALMM is not taken off. So you should say very boldly if ALMM has to be taken off for any capacity addition to be meaningful this year.
Right.
If ALMM is taken off and the PIR is brought back, then this utility thing will also take up very fast, and we can go to 30 gigawatt also if required, because there is so much of pent up demand. Fortunately, the pandemic is behind us. Okay, so as far as utility projects, most of the PPAs are now getting signed because now the discoms have realized that they do not have to sit on those things. Most of the SECI backlog is getting cleared. Okay, open access, more and more states are opening up, as well as the interstate open access is opened up. Rooftop, again, there was a pent-up demand, and because of the corrections that has happened a little bit on the module price there, because there the tariff is slightly higher, it will also. So we are all ready to go, all the three segments. It is just that these two things have to change, then we will reach the target which we have to reach, basically 27 gigawatts a year.
Totally agree. Thank you so much, Pinaki, there. And I'll take one question from the Q&A section. Here in Ms. Divya Chopra has asked how well we are prepared for evacuation and transmission capacity for the capacity enhancement.
Not very well prepared, actually, because most of the substations that is on the ISTS side. So if I took out the utility side, we are not very well prepared. Most of the ISTS substations are delayed. Most of them they are delayed by a year or so, and that's the requirement from the government to provide. And I would say that they should privatize that area also more rapidly. The interstate transmission lines were privatized, but the large pooling substations, mostly it is the sort of realm of one entity from the government. And that is actually today also sort of slowing down things, because in the CNI sector, people want to get the benefits faster because there is some transmission waivers that go off of 25. But on the STU side, on the other side, I would say the situation is better because there was a lot of unutilized capacity in a lot of state transmission entities. There it is better. That's the difference I have observed.
Right. Okay, and again, there are lots and lots of questions, but I will take one more. For residential solar, what are your thoughts? Do you think this sector is going to improve and increase in future? Maybe Karan and Ms. Ritu can take it up. We do have already we have a subsidy, 40% subsidy from the government, and then there are some subsidy from the state sides as well. But how do you think the government can help the sector to grow even more?
We have a full, business vertical dedicated to the residential segment. It's got its own brand, Homescape.
Right.
There is a lot of interest. Yes, of course, the understanding in the residential segment is nowhere near what it is in the CNI today. So it's about where the CNI market was about 4 to 5 years ago. That's where the awareness in the residential market is. It is picking up, but people need to understand that a home solar is more than just putting a solar panel at home. It's a system, how it's integrated, and everything that they need to do to look after it. Then with the kind of cost increases that we are seeing, the payback time, the return on investment cycle is all changing a little bit. 40% is for a smaller system. Then as the system goes larger, it becomes 20%. We have a lot of non-subsidy, and that's the point I wanted to make. We have a lot of non-subsidy customers. So for example, I have a client in Delhi who called up and said that, I want to set up solar, we went and did an analysis and said, because of the kind of shading you're having around your house, this is, your performance ratio is going to be less than what the subsidy mandates. And they said, no, I'm very happy to go the non-subsidy route. And this is not a one-off. We are seeing that increasingly. People are doing it for green benefits. And sometimes they tell us, okay, we want imported modules, or we want dual glass, or something which is not always available on the subsidized side before ALMM came in. So there is all sorts of consumers some of whom are largely going from the savings point of view, but some of whom who are driven by sustainability.
Right. We
Karan?
are on top of our time, and then we will take.
Sorry, Karan had to answer also.
Yes, Karan, please.
Look, again, I think that residential is a completely separate ball game compared to what we are doing. It requires, I think Amplus has said that, they set up a separate vertical. So we don't play in the residential sector. At this point, I think we have at least I have my arms full with all the problems that we're dealing with right now. But yeah, I think I echo what Ritu said, right? I think that, that I would imagine that, compared to a CNI sector or utility sector, residential would certainly be a sector which is less price sensitive, right? Because there's got an aesthetic value to it as well. And there would be certain segment of the market willing to pay a premium around that also. But it is a, completely different segment. It's a growing segment. I think as what I saw was in the last 2 years, I think the residential segment has, on annual installations has gone up about 2x. That would certainly continue to be, right? And I think that's where it is. And hopefully one day we'll also may decide to do.
So I'll go ahead. So the only point I would like to probably tell is the time when industry has big ambitions to do solar, or in terms of renewable, for the next maybe 10 or 15 years. So a healthy competition is something which everybody would expect, and that would come in picture only when we don't have any barriers when it comes to the BCD or ALMM or any new policy which will come in picture. When our stomach is huge, we are catering globally. We can support the Indian mission of reaching 30 or even 40 gigawatt per annum. We can be a part of it as a bigger vendor. But then, we are here for a long run and expect that things will go smooth in the future.
Yeah, I think we have all spoken everything on the topic. But yeah, I do agree that policy consistency across board is very much required to reach the target. And the target that I spoke in the beginning, 27 gigawatt could be a small target, because the demand generation it will come if the policies are very consistent and investors are getting their returns. So yes, policy consistency is the word for a final closure from my side.
Thank you so much for your final remarks, everyone.